It's Friday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Andrew Cox with us with the DHL Supply Chain Pricing Power Index update, but first we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hello, and hopefully everybody's have a great week so far and into a long weekend for Memorial Day. Let's get everybody started into this weekend with talking about some tender rejection rates, which traditionally spike heading into the weekend. Long weekends, of course, mean that a lot of carriers take time off. They get off the road. A lot of drivers are off the road. They've already got some home time laid up. We have been seeing tender rejection rates increase throughout the week. First time notably since all this pandemic kind of settled down back in early April, we started to see rejection rates really fall down out of their peak level around 19% and bottomed out around 2.5% mid to late April, and then ever since have been rising back up. So I've got the outbound tender rejection index of the whole thing composite in the blue line there, sitting up around 4% right now, the highest point it's been since early April or so. And this over the top of it is the reefer outbound tender rejection index, which is a component of the outbound tender rejection index, but we're starting to see a little bit of slowing of the pace for reefer rejection rates. So I know we've been talking about produce season kicking off here in the last little bit. Some of those reefer rejections are higher in some of those markets, but overall in the aggregate, we're starting to see a little bit of softness in the reefer market right now as we enter the holiday period. So this is a little bit of a surprising development. Every week's a new week in the freight market at this point in time. So again, we'll be watching those reefer rejection rates. Not a dramatic change. We're still sitting around 7.69%. We peaked up around just below 8% here earlier in the week. So it's not a dramatic change, but we will have to monitor that moving forward into June and July when reefer demand does hit some of its highest levels of the year. So looking at volumes, reefer outbound tender volume index there in blue, we see that some of these reefer volumes driving lower right now, slightly, just one day, but again, they're falling down a little bit. Van outbound tender volumes still on the way up. So van demand is starting to rise again, as well as reefer demand is kind of falling off right now. A little bit of a surprising thing to see at this point in time. But again, this is a new world order. We don't really know what to expect moving forward. But van volumes continue to show a lot of strength right now. A lot of this freight it appears to be repositioning in warehouses. Port activity tends to be higher. If you've been watching earlier in the week, we were talking about Los Angeles. Los Angeles continues to be a big point of interest, along with the Stockton market. San Francisco, ironically, a lot of the warehouses are positioned in the California area, or the California markets, because that is where they can get off the boats, get into warehouses, and then move across the country pretty easily. So again, the corridor up around northeastern, into Pennsylvania, over there around Harrisburg, Pittsburgh, etc. We're starting to see a little bit of activity there. And then down there in the southeast, for the first time in a while, we're seeing the Atlanta market start to pick up in terms of outbound tender volumes. It's not having a huge impact to tender rejection rates, however, still sitting around 3.53%, which is below the national average at this point. So it's not having a big impact to capacity, but it is worth noting that something outside of the California region is starting to see some volumes pick up. Breaking down the Atlanta market a little bit further, the outbound tender rejection index there with the outbound tender volume index, again, rejection rates pretty flat right now, not having a big jump higher, but volumes continue to be on the rise. Eventually, the idea would be that some of these volumes would push rejection rates a little bit higher. Looking at head haul volatility, which again, this is the measurement of outbound minus inbound into a market. The more outbound you have in relation to inbound, that does put higher pressure on capacity to tighten, upward pressure on rates in general, because you're not going to have the supply of equipment available to cover some of that freight. That is moving higher right now along with volume, so eventually those rejection rates could follow depending on the surrounding markets. So looking forward into the future, this is our customs data right here. We saw this huge spike of customs imports, shipments coming into the country. That has fallen off. Will this materialize in the freight market moving forward? We'll have to wait and see. So that'll do it for this week, and hopefully everybody has a great weekend and today's carrier update. Have a good one.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning everybody, and welcome to another broker update. I'm Luke Falasca, and happy weekend going into Memorial Day. Hope everybody has a fantastic holiday. Let's go ahead and jump in here. Freight volumes are right now higher than they were in 2018 from this time last year. We'll see if this continues or maintains, but if you notice this blue line here, the blue line is continuing to etch up. It's just barely, it might be hard to see, but just barely has eclipsed where 2018 volumes were, which is that green line. And then the orange line would be 2019 volume level, so a decent clip above there, almost 10% above. So we're continuing to see this rise. We'll see if it continues. It may just be an artificial push going into the Memorial Day weekend for shippers trying to get loads out of the way before the weekend. We will see, but as of right now, they are the highest that we have seen. So moving next here, tender rejections are also beginning to rise as we go into the holiday weekend, and with that increase in volume, that is applying a little bit of pressure on capacity, and that's what we see here. We finally broke that 4% line, which is very good to see. So rejections are going up. That is going to increase spot market rates a little bit. Nothing significant right now. It is still low, but it is significantly higher than where we were when we hit that bottom around the 30th of April, which we were sitting right around that 1.5% to 2% mark. So that's continuing to rise. Now, let's go ahead to our map here. We've changed things up a little bit on the map. Right now, what you're looking at is monthly outbound tender rejection change. So the markets in blue are where tender rejections are showing the greatest increase over the past month. The markets in red are where you're showing the greatest decrease, and then the white markets are relatively unchanged or stable. Notice here all the way on the West Coast, for the most part, the West Coast, including Phoenix area, is very blue. A lot of upward pressure on tender rejection, which is going to increase spot market rates. Also, this will tighten capacity. So if you're looking for areas to call potential new customers, I'd focus here on the West Coast. You might have a little bit of luck down there in Florida as well, as that's tightened up a little bit, some parts of the Midwest, but for the most part, things are going to be a lot tighter here on the West Coast, or at least tightening. It's not to say that they are tight, but they are moving in that direction, and that looks like where we're going to be leading the pack. Next, right here, we're going to look at our lane signal chart. So something that is a very new update. We're looking at LA to Dallas. Keep in mind this will be for drive-in. Now, the first thing you see are these gauges. Remember, they're on a scale from 0 to 100. If you're close to a 0, pricing power is in the favor of the shipper. If you're closer to 100, pricing power is in the favor of the carrier, and 50 would be a perfect balance. So now as brokers, you're playing both sides of this. Keep in mind, LA has a score of 54 today. That's been on the rise. Just a couple of weeks ago, it was in the 40s. That's going to mean that carriers have a slight edge for pricing power. Going into Dallas, the score is a 58. Yes, Dallas has better pricing power for carriers right now than LA, which is going to increase pricing and tighten capacity on lanes coming out of Dallas. So if you're moving loads on LA to Dallas today, keep in mind you have a little bit of negotiating power as you're actually taking carriers out of a market that has pricing power and sending them to a market where carriers now have more pricing power. Use that as leverage. You're doing the carriers a favor, sending them to a better market where they want to be. That should allow you to be competitive on your rates. Now, today's rate, we're sitting right around $1.53 for this lane, right? That's up a little bit from a week ago, but day over day, it's actually decreasing. If you notice down here in the bottom right, you can see a drop. We were sitting closer to like the $1.80 mark about a week ago. So we're actually dropping off of that level right now that we're sitting around the $1.53 mark. That's due to Dallas beginning to tighten up and causing a little bit of rejection. So that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome Welcome to your DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what's the latest?
Well, Anthony, the carriers are now in the strongest position they've been in the last 2 months, but don't get me wrong, the shippers are still in a really dominant pricing power position, but things are much brighter today than they were just 2 weeks ago for the carriers. And the big momentum swing has come on the behalf of the volumes. I'm not going to beat a dead horse. You know, Zach and Luke both talked about it a lot. They are now positive both year over year and on a 2-year stack. It's yet to be foreseen how long this can last, because not only did the 2018 volumes kind of surge there into June and July, but you know, there's thought here that this could be a lot of pent-up demand that's kind of surging these volumes upward right now, and they could stabilize or even fall down a little bit here in the future. But the good thing for carriers is this means they're getting options. They now have options that they weren't there just a couple weeks ago when volumes were down really low. And it's not only the contract market that's heating up, but if we look at the truckstop.com van volume index, you see a lot of green on these 100 lanes and some big numbers, doubling numbers week over week. So you see a lot of volumes not only to contract, but also starting to hit the spot markets as well.
Excellent. And so when we're looking at these volumes, I think a lot of the debate is what kind of good and what industry this is coming from. Any thoughts around that, whether consumer facing, industrial, anything?
Yeah, I mean, if we look at that, I mean, I keep referencing the Bank of America credit card data. That's my best gauge of what's moving right now. And you can see that, you know, restaurant spendings are now up, grocery spendings is still up, produce season is out on the West Coast. You saw Luke and Zach talking about that West Coast capacity tightening and also that a lot of volumes coming out of that way. So, you know, California and Florida feeds the country for most of the year, and those are the harvests that are happening right now. So I would say a lot of produce, but there's also a lot of e-commerce and consumer-facing things. We look at that online electronics sector. That's up 150% year over year, and you see a lot of retail goods moving right now. So that's where I'd say produce and retail.
And so we saw it was a 5-point gain for this most recent week for the index. And we see volumes coming up. Any anticipations of this being sustainable with the current environment? I know it's kind of a shot in the dark here, but any thoughts around that?
Yeah, I think moving forward, we're really just going to have to watch this, the capacity side of the equation here. We're starting to see some upward pressure on the outbound tender rejection index, but again, this could be a little bit of a Memorial Day bump, kind of where some drivers are expecting to take the weekend off. But you're also seeing reefer rejections kind of hit a plateau there. So this is going to be really something to watch and see if capacity does tighten as volumes continue to rise. I mean, that would tell me that that some drivers actually have left the market and capacity could tighten up. But right now we haven't seen a lot of pressure. I would like to hope to see next week somewhere in the 5 range, a large gain on the outbound tender rejection index. That would give me more confidence for the carriers moving forward.
And so we've had, of course, consumer spending. It's been strong thanks to, I think, a lot of that additional weekly stimulus that's been given out on the weekly bonuses. Do you think that's going to come into effect when we're looking at the August timeframe when some of those might be coming offline?
Yeah, that's something I've been thinking about a lot. I mean, we've seen you have a lot of mixed things happening. You have import volumes coming down, and they're expected to fall even further into May, the end of May and June. And you have consumer spending that's rip-roaring right now, but a lot of it is due to that extra money that people are getting and the stimulus checks. But that's all going to run out here at the end of July. So that's definitely going to be something I'm watching to see if imports can come in and maybe pick up some of the slack that's going to come from a drop in consumer spending, because I do expect consumer spending to level off and fall towards the end of that period when we lose that money. So yeah, we're just going to have to watch imports and consumer spending, really.
Excellent, Andrew. Insightful as always. Thank you so much for that update, and thank you so much for tuning in. That's going to do for this DHL Supply Chain Pricing Index. Be sure to tune in next week for the latest update. Thanks so much for tuning in. That's going to do for this Friday edition of FreightWaves Now. The content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves TV app on all your favorite streaming platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.